What's going on, guys? We're going to hop right into it today. This video is long overdue. I know a lot of you were waiting on it. On the previous video of part one of how to properly identify the high and low of the day, I saw a lot of great feedback. I saw people asking questions for more in-depth examples and, maybe more concrete explanation of this process, and asking you shall receive. So, we're going to just start off first by looking at this simple Google Doc to make sure we remind ourselves of the steps of the process. The two things that are highlighted in yellow are new, and I just wanted to bring your attention to those. We're going to map that out on the charts in just a moment, and it'll be very clear to you. So if we walk through the steps again, the first thing and that is new is that we're going to mark the Asian and London session ranges, right? So first, you're going to mark the Asian and London ranges, right? Then we're going to, confirm either the high or low. When we're confirming a high, we need to see a low created, and when we're confirming a low, we need to see a high created. And then what is the next thing? We're going to look for a failure to create a new higher high or higher low. And then the fourth bullet point I added because if someone is not as aggressive, in kind of how precise they're trying to um, pinpoint where the market is going to either reverse or bounce from, what they can do is they can wait for a confirmation pattern, such as, Quasimodo, head and shoulders, engulfing bar, or any candlestick pattern that you find particularly useful for you and that you find works well with your current strategy. And then how this can be used in your trading is, if you already have a methodology for, finding points of interest, you can add confluence to your points of interest. If you know what points of interest you're looking for, but you just can't seem to spot them, this can help you find those. It can help you find those points of interest. This will help you also tighten up your stops. If you know that you're selling from the highs and lows of the day and you know exactly where to place your stops, this will help you decrease your how large of a stop loss you use. Thus will allow you to increase your risk to reward. And then when we potentially you're going to explore this later on, this will help you and will be a tool that you can use to formulate a bias. So you'll be able to say, I'm either bearish or bullish on the market. And we all know that that will, be very effective in your trading because it will allow you to cut out half the confusion, right? You'll know whether you're a buyer or whether you're a seller, not both, right? So let's hop on straight over to the charts and, put these steps into action. So it is currently it's about noon, August 17th, 2022, and we're looking at starting here August 15th. So this is this current week, and let's go through the steps as follows. So we marked up the Asian and London ranges, right? And then I marked up this high of the day, and I have that it's a confirmed high of the day. But let's explore why. Well, what does our process say? So we marked the Asian and London session ranges, right? So now what do we need to do? We need to confirm, right, this high. Can we do that? We can see that this low confirms the high, right? That makes sense. So we're on step two. Now let's move to step three. What do we need to see? We need to see a failure for it to go higher, and we saw that right here. So yes, indeed, this was the confirmed high of the day because one, this high was confirmed by this low, and we also had a failure to break above this high, so it failed higher high. All right. Now let's look at Tuesday, right? Because for the sake of this example, let's say that we were continuing to be sellers and we were interested in looking at the highs. Well, we go through the same process. We mark the Asian and London ranges, right? And if we look at this high here, was this indeed a high? Yes, because it was confirmed by this low. But what is the next thing in which we need it? I'll wait a second. We needed a failure to go higher. If you said a failure to go higher, you were absolutely correct. And what did price do? Price did indeed go on to make new highs, right? And even if we'd like to look at it like this, we could have said, okay, well, this wasn't the high of the day, but potentially this one is. We can go through the exact same process and see as to why it wasn't, right? We have this high that is confirmed by this low, right? And then we need a failure, and we never got that. We never got a failure to go. uh, we never got a failure to go higher above this one. So this was not the high of the day either, obviously, right? So, we then can move on to today, right? This is just this morning. And, we had this long wick, had a little bit of volume in the Asian session. And I have asked you the question, is this the high of the day? Yes, yes, indeed it is. And why is that? Well, first, what is the first thing we need? I'll wait a moment. Yes, if you said that we need to confirm that this high by either one of these lows, then you're correct. And then what is the second thing in which we need? Yes, you're absolutely right. If you said a failure to go higher, right? So this was indeed the high of the day, right? And the point of this video again was to be a little bit more in depth and kind of give you a better framework as to how you can use this, and just to some of the points that I previously mentioned. If you were an individual that maybe traded supply and demand, for instance, if you wanted to take this as your supply, right? And I'm not saying that this is supply, or if you know we're not getting into that yet, but this is just saying if you had that marked up, right? You can say that you only want to take supply zones that are near the high of the day, right? Or demand zones that are near the low of the day, right? It adds a lot more confluence, to that trade that you want to take, and it helps you kind of buffer out those setups that might not be as high probability. Another one may be if you prefer to trade something like order blocks, right? Some people have a very hard time seeing order blocks within the naked eye, right? Um, More than likely, if you're correct about this being the high of the day, your point of interest is going to lie somewhere in here, right? So you may say, okay, I identified, this order block, either this order block or this order block, and that helped you find that your order block or your point of interest was going to be somewhere in this area near the high of the day. And in addition, for those who maybe trade in order blocks, you may have marked this order block up here, right? This bearish, bullish, bearish pattern. And then you barely got stopped out. Well, just because it's your point of interest doesn't necessarily mean that you have to call it to the pip. It doesn't mean exactly that your stop has to go right above here. You'd have known, okay, this is the high of the day. So the best possible way I can position myself is to have my stops above the high of the day, right? So you may have avoided, being stopped out in this scenario by simply having your stops placed in the right place because you are aware of the highs and lows of the day. And then, this is not the purpose of this video. This is, to get into different trading strategies or how to identify your points of interest. But how I particularly use, this in my trading is if I identify, this is a high of the day, I'll take my Fibonacci and I'll draw it from the high to the low. And I like to take my trades somewhere between 70% and 88%, right? And notice how it comes right into this area, taps if you're correct, and we get a drop to whatever my predetermined targets are. Where this is super useful is a lot of people will be able to identify this and see this pullback and take the trade here, but may not place their stops in the correct place and get stopped out. Now, me in particular, where this helps my trading, it makes it a lot more mechanical and rule based, is I know that I will place my stops above the high of the day. And if we look at this example here, right, we knew that we weren't sellers, for instance, in this scenario. But let's say that we were the exact opposite. Someone else had the right idea and said, I wanted to be a buyer on Tuesday. Well, what they would have done is they're going to use the same process that we used. If they're a buyer, they're looking at the lows, right? Is this a low? Yes, because it's confirmed by this high. And did we get a failure to go lower? Yes, we got the failure to go lower. So this is indeed the low of the day, right? So what an individual could have done is they could have taken their Fibonacci, went from the low to the high, waited for a bounce in their respective area. Again, mine is between 70% and 88%. They would have taken this and let it run. And in terms of the stop loss placement, which is the key point that I'm trying to really hit the nail on and drive home, is it would have been right here below the low of the day. There wouldn't have been any guessing, right, when we got here in the 70% and, potentially having it too tight. It would have been below the low of the day. And if you were correct, like we were, then boom, you would have been able to have a much better risk to reward by, simply having confidence and knowing that although your stop is tight, which let's measure it really quickly. Let me just get a measure tool. Although your stop was tight, 5 pips, you have confidence in this, right? Because you know that you're potentially trading away from either, in this scenario, the low of the day. So, that wasn't, a spiel to tell you about different strategies to use or how exactly to enter the market on that. We can get into that later on if you are interested. But that's just, I want to give you kind of a sneak peek of how this can be useful, right? It's not simply for the fact of just being able to mark it up on the charts and just say, the high or low of the day. It's about being able to identify this in real time and being able to implement this in a set of actionable steps that you can use in your trading. So, you know, you guys did a great job last time, with the comments, the feedback, encouraging each other and asking questions. So I encourage that you do the same thing. Thank you all for taking a moment to listen. And any request for either, you know, uh, any further explanations or anything that I spoke about today or anything I haven't spoke about today, just leave a comment below, and we'll get right into it. And yes, happy trading to you all. Peace, love, and blessings.